So, GM to every Brine node present here on this call. I'm just really excited to see you folks make time on a Saturday and, joining the first episode of the Seasoned Trader. So, you must be wondering why we chose this name. It's because of two reasons, right? So, the first reason is because Aryan, who's a seasoned trader, will be joining us to take these series ahead. And the second more important reason is that he'll be making each one of you and converting you to be the seasoned trader. So I just like this is really exciting for me, because myself I've been trying to learn trading a lot, but I feel a personal touch from Aryan could really boost me. So let's get this session started. So let's start with the seasoned trader that we have on board. So Aryan, he started his trading journey back in 2017 in the equity market, and he's a certified research analyst. And he's worked with JP Morgan before joining our team. So Aryan, would you like to tell us a bit about yourself in a candid way? We just love to hear from you. Yeah.
Sure. So just like Ritu mentioned, I've been trading for a while now. And what made me shift to crypto was, the flexibility that it provides, right? If I am trading equity, it's only limited to a certain time frame. I cannot trade beyond that. But in crypto, the benefit is that I can trade as per my, my availability. So whether I want to trade at 2 a.m. in the night or whether it's, 2 p.m. on a Sunday, I can pick out to trade. And that's why I chose crypto. So let's start the session with a fun fact. Do any one of you know why an uptrending market is called a bull market and a downtrending market is called a bear market? So the main reason is that when a bull hits, right, it moves its horns upwards. And that is why it's called a bullish market when the market goes up. And at the same time, when a bear hits, it moves its claws downwards. And that is why when the market is going downwards, we call it a bearish market, right? So in this session, we are going to go over a lot of new and exclusive topics, which I believe have not been covered anywhere else. And this is because these topics are the ones that I have developed myself over my years in trading, right? So in this session today, we're going to go over the basics. All right, we're going to go over how to identify a trend. Then we're going to go over Japanese candlesticks. And finally, we're going to understand support resistances. And then we're going to end it with why Brine is a great platform to trade. Okay, now before we start today's session, at the onset, we first want to identify what kind of a trader are you. Because depending upon this, your whole journey is going to be based, right? Whether you want to be a scalper, whether you want to be a day trader, whether you want to be a swing or a positional trader. Now, all of this depends upon how quick you are with your decision making, right? So for this, we need to understand ourselves and our personality and determine whether we are good at making quick decisions or whether we like to take some time out to make decisions or whether we like to, take a whole day out and, go over all the consequences and all the results and then finalize our decision. So a scalper is someone who trades in the 1 minute to 2 minute time frame, right? And a day trader is someone who trades throughout the day between a 1 hour or a 2 hour time frame. And a swing trader is someone who carries this position for days or weeks. And a positional trader is someone who carries this position for months. So depending upon how quick we are with our decision making, we can choose what kind of a trader we want to be, right? So once we have finalized what kind of trader we want to be, we can move on to our next topic, and that is trading with the trend. Now you all must have heard this phrase, which is the trend is your friend. And the reason we say this is because we always want to go with the market. We do not want to fight the market or majority of the traders. We want to be in that majority group and flow with the market. All right. Just imagine if you want to swim in a river and you want to go against the stream. It's going to be very, very difficult for you to swim, right? But at the same time, if you decide to go with the stream, it's going to be very easy for you to flow with it. The same thing applies to trading. When we want to go with the market, with the trend of the market, our targets are easily achieved. But if we wish to go against the market and if we try to fight the market, it becomes very, very difficult for us to hit our target, and we keep on hitting our stop losses, right? So now that we know that we have to trade with the trend, we first need to identify how do we get to know where the trend is? How do we gauge which direction the market is moving in? So the simple answer to this is that we have to just zoom out and look at the bigger picture to find out what is the actual trend of the market. And let me show this on a real chart. Okay, let's take this chart. Now, imagining I am a day trader, okay? I trade, say, a 15-minute or a 30-minute chart. If I see here, I will say that, okay, the market is moving down, but that might not be the right trend of the market, right? So to find out the actual trend of the market, I need to zoom out a bit. So if I'm in the 30-minute chart, I want to move out to, say, the 2-hour or the 4-hour chart. So if I move to the 2-hour chart, I can see that the trend is somewhat sideways. So what I want to do is I want to zoom out more till I find where the market is moving. So if I move to a 6-hour chart and I zoom out a bit, then I can say that, okay, the market went up and it's currently in a correction. And after that, most probably it's going to continue going up. Why? Because the trend of the market is upwards. And that is why in such a market, I do not want to take bearish trades. I will always want to take bullish trades. And this is very, very basic, but at the same time, very, very important because, we learn all kind of indicators. We learn the moving average, RSI, Bollinger Bands and whatnot. But what we miss out on is the most basic thing, and that is identifying the trend. Because no matter how many indicators I want to use or how many support resistances and trend lines and Fibonacci and what all we want to draw on our chart, if we don't know the trend of the market, we are not going to get our targets, right? And even simple, very, very simple analysis will help us achieve our targets if we know the right trend. Okay. Let's take another example. Say I'm a positional trader and I trade in the 3-day chart. So in the 3-day chart, I can see that the market is moving up, but I will not decide the trend from here. Remember, whatever my time frame is, my trading time frame is, I am going to zoom out on that. So if I want to trade on a 3-day chart, I will move on to, say, a weekly or a 2-weekly chart. And once I move to the 2-weekly chart and I zoom out a bit, I will find out that the actual trend is downwards. Although we are in an uptrend here, we have some sort of correction of this trend. We are again going to continue moving down. Why? Because our main trend is downwards. Okay. So whenever you are identifying the trend, make sure you have approximately 100 to 150 bars on your chart. Okay. When you zoom out. Okay. So that will help you identifying the right trend in which you want to trade. Okay. Let's move on to our next topic, which is the candlestick chart. Now, once I have identified my trend, okay, I'm going to look at the candles in my chart and I'm going to do a candle by candle analysis of my chart to find out where should I trade. Now, this candlestick chart, which is actually called a Japanese candlestick chart, has a story to it. So long back, I think in the 18th century, there was this rice trader by the name of Munehisa Homa who found that there was some pattern to this price. The price, before that, it was believed that the prices just move in a random direction, right? Which is called the random walk theory, which says that, there is no pattern to the price. It just moves, regardless. But this man, Munehisa Homa, he thought that, the prices are not just moving randomly. There is some pattern to it. All right. And that is when he started noting down the high, the open, the close and low of every day. Okay. So he would go to the market and he would sit there throughout and he would find out the highest that it went, the open, the price at which it opened, the price at which it closed, and the lowest that it went. And he would note this down every day and he would by hand draw it on a chart and try to find out the pattern. And that is how this came into being. So if you see, both the candles are almost the same. There's only one difference. And that is that in a bearish candle, which is generally a red candle, the open is higher and the close is lower. Right? Whereas in a bullish candle, which is generally green in color, the open is lower and the close is higher. Okay. But the high and the low of both the candle is always the same. Okay. So remember, every candle is a battle between the bulls and the bears, the buyers and the sellers. So if I see a red candle, what that tells me is that the sellers or the bears have won this war, okay, this battle. And if I look at the green candle, this is telling me that the bulls won the battle, and that is because say a market opened at $100. Okay, it opened at $100, but the bulls were so powerful that they pushed the price all the way up to $120. And however, they were not able to close at that, but they finally closed it at 110, making a low of say 90. Right. So although we opened at 100, we went all the way to 120 and finally closed at 10. So those $10 is what the bulls have won. Okay. If we take the other type of candle, which is the bearish candle, in which the bears have won. So suppose the price opened at 110 and then the price made a high of 120, but it again went down, made a low of 90, and then came back up to close at 100. All right. So in this candle, we can say that the bears have won $10. Why? Because they were able to push the price down from 100 to say 90. Okay, let's see this on a real chart. Let's take these two candles. So the white candle here is the bearish candle and the blue candle here is the bullish candle. Okay. So the white candle here tells me that the price opened at 1,431. It made a high of 1,634, but it went down all the way to 470 and finally closed at 552. So in this battle, we can say that the bears have won 875 points. Right. In this candle, we see that the price opened at 759. It went all the way up to 1,612 and finally closed at 1,431, making a low of 749. Okay. Now you see the upper wick and the lower wick, which is also called the upper shadow and the lower shadow, tells us the lowest and the highest price. And this also gets us to our next topic, which is price rejection. Okay. So simply, price rejection is the level at which the market is not able to accept that price. Okay. So if we see here, we can see that the level of 1623.24, we can say that this level is where the market is rejecting this price. Okay. The price is trying to move up, but it's pushed down again. It's trying to move up, but it's pushed down again. Right. So this tells me that this high is the level of the price which the market is not ready to accept right now, and that is why it is rejecting it. Okay. And when we talk about price rejection, there are two very important candles that we want to keep in mind. The first is called the inverted hammer. Okay. So the hammer can be identified easily by measuring the wick of the candle. Okay. Now remember, the color of the candle does not matter. Whether it is green or whether it is red in color, it does not matter. As long as the wick is at least twice or thrice the length of the body. So till the time the wick is longer than the body, I will still call it a hammer, no matter whether it is bullish or bearish, whether the color is green or whether the color is red. Okay, let's find out a hammer here. Okay, I see a hammer here. Right. This candle right here, if we measure the wick is 138 points and the body is only 35 points, right? So it's way more than 3 times the body. And I can say that this is a hammer. Now, what does this hammer signify? This hammer signifies that the market is not able to accept this price level, and that is why it is strongly rejecting it, and the market is going up, right? So if I see the price got rejected here, closed up, although it went back down here, but it again moved up, right? So this tells me that the zone here is a price rejection zone, okay? This zone here is a price rejection zone, which means that the market is not able to accept that price, and the market is pushing the price forward from here. Now, if we talk about the inverted hammer is bearish in nature. Just like the hammer is bullish in nature, it tells us that there is a support in the market. The market is not able to accept lower price levels, and that is why it is moving the price upwards. The inverted hammer tells us that the market is now rejecting the higher prices and the market is pushing the price lower. Why? Because the market is rejecting the price on the higher end. Let's try to find out an inverted hammer. I see it right here. So this right here is an inverted hammer. Okay. If I measure the length of the wick, which is 460, and the length of the body is only 71. So it's more than 3-4 times the length of the body, the wick. And that is why I'm going to call this an inverted hammer. And once this inverted hammer has appeared in the market, I'm not looking to make any buy trades. I'm only looking to sell the market. Why? Because I know that the market has rejected this price, and that is why it's eventually going to go down. And here we can see that after going to this zone, it has rejected the price and the market has moved down. Okay, if any one of you wants to give me a chart for me to analyze or find out a hammer or an inverted hammer, they can do so.
Aryan, that was a great explanation. I think everybody is going to go back and implement the hammer and inverted hammer strategy if they do not know any further. So this is the first thing that they're going to try out, I'm pretty sure.
Absolutely.
Do we have any questions at this moment from the audience? You can either put it in the chat or you can, unmute yourselves and ask him right away.
Right.
If you have any questions, you can post it in the chat meanwhile, and we'll resume the session. Yeah, please, Aryan.
Sure, definitely. Right. So the next type of the most important candle that we want to focus on is called the doji. So the doji in Japan means just as. Okay, it means just where it started, and that is what the candle is. So if you can see, the candle opened here and closed right here. So there is no movement in this type of candle. But this type of candle gives us a very important information that neither the bulls nor the bears are able to accept the price. Okay, when the price went down, the bulls are pushing it up, and when the price went up, the bears are pushing it down. Okay, so it's a battle that is not won by anybody, right? It's, you can say, a stalemate, right? Nobody is able to win the battle, and no matter what the color of the candle is, whether it is green, whether it is red, it tells us the same thing, that nobody won the battle and we just ended where we started. Okay, now where do we use these kind of candles? Now remember, the location of the candle is just as important as the size of the candle, right? The size of the body and the wick. So we want to look for these type of candles when the market is overstretched, okay, whether it is overstretched on the upside or the downside. What I mean by overstretch is when it has moved a lot in one direction and one direction only. Let's try to find out such a scenario in this chart. Okay, somewhere I see that the price started here. The price started here and it was pushed down a lot, right? It crashed almost 94%, right? That's a big crash. But I mean, those who are familiar with the crypto market, it's normal for them, right? But although we can say that the price crashed a lot, and here we see that a doji kind of a pattern is forming, right? Where the body is very, very small and the wick is very, very big. Right? The wick, the upper wick and the lower wick, both are quite huge, and the body is very, very small. And it is way bigger than all these candles. It is engulfing all the previous candles. So this tells me that this is a very, very strong signal that the market might reverse from here. And why do I say this? I say this because all this while the bears were winning, right? All this while the bears were able to push the price further and further and further below. But finally, the bulls have come back and they're giving a fight to the bears, right? They're trying really hard to push the market up, although they're not able to, but they're still able to sustain that price level, right? They're not letting the bears to push the price down, which the bears have been able to do so for so many candles. All the previous candles, the bears are able to push the price down. But in this one candle, we can see that the bulls have come back and they're giving a tough fight to the bears, right? And that is how I know that, okay, the bulls are catching up slowly, and in the future we might see an uptrend here, and that is what we saw here, right? Right after this doji candle, we saw a good uptrend of 200%, right? So look out for these doji kind of patterns when you see that the market has overstretched itself. Okay, and they will appear, between the trends also, but such candles do not hold so much importance. When the doji appears at the end, at an overstretched position, that is when it is most important, and that is when we can initiate trade, and we can keep the stop loss right a few ticks below the low, and we can initiate a buy trade here. Okay. Although this is a counter trend strategy, you can use this because the risk here is very, very small. What you're risking is 12 points, and the minimum target is twice this size. Okay, so twice the length of the candle, which is 60 points. So from here, I go to 120 points, and we can easily achieve that target within a few candles, right? So if I see this candle after a very long downtrend or very long uptrend, I see such a candle, I will take a trade here. I will place the stop loss here, okay, right below the low. But if I'm selling, I'll keep it right above the high, and I will start trading, and I will initiate my trade, and my target will be twice the length of this candle. Okay. Let's move on to a third type of candle, which is called a marubozu. A marubozu in Japanese means bald, right? If you look at the candle, it is bald. Why? Because it has no wick. Either up or down, it has no wick. It has only the body. And that's why it's called a marubozu. So what is the significance of this type of candle? This type of candle generally appears in the middle of a very strong trend. And this candle tells me that the trend is going to continue moving up, continue in the same direction, right? If it is a green candle, it is telling me that the trend is going to continue going up. And if it is a red candle, it tells me that the market is continuing to go down, right? Let's find out a marubozu. Okay, we see one here, right? This candle. Although there's a small wick up here, but it is, irrelative to the body of the candle. Okay. Now always remember, we are going to measure the wick against the body of the candle. So the wick is only 10 points, whereas candle is 50 points. So it's only 10% of 20% of the body, and that is why we're going to ignore that, and we're going to look at the big body of this candle, and we're going to say that, okay, the trend that started here is going to continue. And the way you can use this candle is to trail your stop losses. Okay, so suppose I see this big doji here, I initiate a trade here, and I see this big marubozu. Okay, I'm going to say my analysis is right and the market is moving as expected. I'm going to stick to this trade and I'm going to move my stop loss to here. So from here, from 90, I'm going to move my stop loss up to 108. Okay, and I'm going to continue riding the trend. So Once I see this candle, I see another doji. Okay, I'm going to become a little, I'm going to become a little skeptical about the trend of the market because it has given me a doji again. Okay, but then I see a Marubozu again, and that tells me, okay, I need not worry. The market is continuing in my trend, and I will again move my stop loss higher up here to 132. Okay, and then I'm going to continue riding the trend till I see my stop loss being cut. Okay, so I'll continue moving the trend up here to all the way up to 328, and I'll keep my stop loss here at 249. And when I see that the stop loss is taken down, and that is when I'll exit my trade. So it will allow me to ride the trend for a very, very long time. So just giving you an explanation of what a stop loss is. So whenever we take a trade, it is very important that we keep a stop loss. A stop loss is what helps us protect our capital. Okay, a stop loss is a level at which I will say that, okay, although my analysis was that the market should go up, it did not go up, and I have to accept that I was wrong and I will get up. Okay, because I want to make a mistake that will allow me trade further. I don't want to make a mistake that will wipe me off the market, right? When we are in a casino, the most important thing is to preserve our chips. Because if we are not preserving our chips, we're going to run out of the chips and we're going to be out of the game, right? So the most important thing is preserving our chips. And for that, we always want to keep a stop loss. Okay. And the way we trail the stop loss is whenever the market moves up in our direction, we move the stop loss above. So that gives me another cushion of preserving my capital. So suppose I initiated my trade here. Okay, I initiated my trade at 106. Okay, and I see a big candle here, and I kept my stop loss here. Okay, at 90. And I bought at 106 and keep my stop loss at 90. And I see a candle here. I'm going to move my stop loss from 90 to 109. So now I know that I have moved my stop loss from 90 to 109. I'm not going to lose any money because I bought at 106. My stop loss is at 109 and I'm not going to lose any money. I'm going to continue riding the trend. Okay. And only when my stop loss is cut, I will exit here. So it gives me the opportunity to ride this whole big trend all the way up. All right. So we are done with the most important type of candles. If you guys have any questions regarding these candles, please you can unmute your mic or you can type in the chat box and we'll take them. Meanwhile, we will continue to our next topic, which is support and resistances. If you guys have any questions, I'm telling you again, put it in the chat box. Or if you guys want me to analyze any chart of your choice, you can tell me that too. I will take it up on TradingView and we'll analyze that chart live. Right. So let's have a look at the chat box. I don't see any questions here. Cool. We'll move on to the next topic.
Actually, Aryan, we have a question, but I'm not sure if it's relevant right now. So,
could you read it out to me?
Will the project implement automated trading strategies based on AI analysis? That's something that we cannot answer right now, and it'll be announced in the channel once the service is ready. But this session is only for discussing manual trading and not AI. So I'm really sorry to disappoint you. Yeah.
But yeah, don't worry. This is the very first session that we are having. In the sessions that we have ahead, we're going to cover a lot of new topics. We're going to talk about Neo Wave. We're going to talk about Elliott Wave. We're going to talk about how to use time in your analysis. The X-axis trading, as we call it. And we're going to talk about 3D trading and a lot of new things. So just stay tuned. And we're having this very first basic session so that we can, take everyone along with us. Even the beginners can follow us. And we'll move on to advanced topics as well. Okay, so right now talking about the next topic, that is support and resistances. Okay, so starting with the very basics, just imagine the support to be the floor and the resistance to be the ceiling. Okay, so what does a floor does? A floor allows us to stand on it. It allows us to not fall under, right? And that is what support does, right? So the floor and the support follow the same analogy, which is it allows the price to not fall for, right? And it helps the price to stand on it. As we can see in this image, the price moved below, but the support helped it move further. And then again it came down, but the support helped it move up, right? And again, the support was tested again, and again it pushed it up. At the same time, the resistance is like a ceiling, right? So if I throw something up, it's not gonna go beyond the ceiling, right? Because the ceiling is going to help it stay within this zone. Similarly, resistances will help the price not go beyond. It will stop it against going up, and it's going to push the price down. So we can see here the price came up and it was pushed down. Again, the price came up and it was pushed down. But we see this interesting phenomena wherein this resistance has now turned into the support, right? The same price level, which was earlier a resistance, has now become a support. This is because of this rule, which is called the rule of bipolarity. Okay? The rule of bipolarity says that a resistance turns out to be a support once it is broken, and a support turns out to be a resistance once it is broken. Okay, so I see that there's a resistance here which is taken down, means that it is broken, right? It is crossed, and once it is crossed, it goes down. And now this resistance is now acting as a support. It is not allowing the price to move further down, and now the price is moving up, right? And similarly, we see here that a resistance is here again. It's pushing the price down. It's pushing the price down, and now again, once it is broken, it is helping the price stay above it. Okay. So support and resistances, once broken down, change their characteristic. So if a resistance is taken down, it becomes a support. If a support is taken down, it becomes a resistance. Now let's look at a live chart and try to find a support and resistance.
Actually, Aryan, meanwhile, I'd like to say something. Just like as you
Sure.
mentioned, floor and ceiling, right? So, the technique that you mentioned, it reminds me of a building with so many floors. So, an external
Right.
factor like a stair or a lift can take you to the floor above, and then the
Right.
ceiling of the previous floor becomes the floor of the current floor. So
Right.
it's sort of like that.
Right. Very interesting. Very interesting. Yes, exactly. So once you are above a floor, it will that same ceiling becomes the floor now.
Yeah. Exactly.
Right. Interesting. Nice. So just like we spoke, we see a resistance here, right? Somewhere around this zone. Let me draw a triangle here. I see this zone as a ceiling, right? Because the price is moving up, going down, moving up, going down, right? So this is a ceiling here, there's a resistance here. What do we see here is that once the price has broken the ceiling, okay, then the same zone is acting as a support and pushing the price up, right? And if we look at the longer chart, we also see that there's a resistance here, right here, and it's acting as a resistance again. So here we see a resistance which is taken down, acts as a support, goes up. Again, we see a resistance and it is pushed down. Right? And now again, when this resistance becomes a support, again when the support is broken down, it again starts acting as a resistance and it's pushing the price down. Right? So this is something that we need to keep in mind, that once a support is taken down, it becomes a resistance. Now, there's a very interesting psychology behind this. Okay. And the psychology behind this is that suppose this is a resistance, right? As we can see, this is a resistance. Now, I'm a trader. Okay. I'm a trader who bought somewhere here. somewhere in the 265 levels. Okay, I bought it here thinking that, okay, when the price reaches this resistance zone, I'm going to sell it. Okay, so I buy here, price moves up to 491 and I sell here. Okay, and I'm very happy with the profit. But what I do not like is that this zone, this resistance zone is taken down and the price has moved further up, right? So now that the price has moved further up, I'm just waiting for that one opportunity for the price to come down. And as soon as it comes down, I'm going to buy it again. Why? Because now I know that that resistance has turned into a support. So I am cursing myself that why did I sell here? If I would have just continued holding, I would have made, all of this money. So I'm just waiting for the price to come down for a second and then I'm going to buy it again. And that is why the resistance now turns into a support. Because of all the buyers who bought here and sold here, right? They're waiting for the price to come down. And as soon as it comes down here, we see it was bought again and it goes up. Okay. And this is the psychology behind trading, which we do not keep in mind, and that's how we fall into the traps. So we need to make sure that we, in addition to the chart that we see, we try to understand what is the psychology behind it. Because in the end, whether they are bots trading, whether they are people trading, it is the human mind that is being used, right? So we need to understand that these charts are showing nothing but mass psychology, right? And that is why a lot of research on mass psychology is done on price chart. Why? Because it is a very good way of understanding how a crowd behaves. And that is what we have seen time and again, that once the resistance is taken down, it acts as a support and pushes the price up. Let's try to find out another example of a support that turned into a resistance. Okay, if I look at the price here, this zone here, this zone is acting as a support, right? The price moved up, came back here, was pushed back up, came back here, pushed back up. And now, when the price has taken down this support zone, it's again acting as a resistance and it's pushing the price down, right? So make sure that you keep in mind that any support or resistance, once taken down, will reverse its characteristic and will start acting as the opposite one. So if it's a resistance, it'll start acting as a support. If it's a support, it'll start acting as a resistance. Okay, so currently we only covered static support and resistances. We also have something that is called dynamic support and resistances. So dynamic support and resistances are nothing but trend lines, right? So the reason it's called static and dynamic is because when I say it's a static support, it's always at the same level, right? So if the support is at say 123, it's at 123. It's 123 again here, somewhere around 123. But if I talk about dynamic support or resistances, here I see there's a dynamic resistance. Okay, so initially the resistance is at 705, then it moves down with the price to 378 and it moves down again to 113. Okay, so we're going to cover this dynamic support in more detail, and we'll also go over static supports in more detail in our upcoming sessions. But for now, just keep in mind that whenever you're using support and resistances, make sure to keep the trend in line with it, right? So whenever I'm using a support, I will only use it in an uptrend, because supports will work best in an uptrend. When the price is moving up, it's going to come down, take support, move up, come down, take support and move up. But at the same time, if I am in a downtrend, the price is going to go down, have some pullback, then going to go down, have some pullback, then going to go down. So whenever I am looking at a bullish market, I'm going to use supports. When I'm looking at a bearish market, I'm going to use resistances. Okay, and that is why we should not use support and resistances in individuality. We should always combine them with the trend and the other candlestick patterns that we just spoke about, right? When we combine these three things, that's when we get a good trade, right? So the way I'm going to analyze the chart is, first I'm going to look at the trend. Okay. Once I have identified the trend, then I'm going to mark the support and the resistances. And if I see that the trend is downwards, I'm going to focus on the resistances. And even on the resistances, when I see a doji-like candle, when I see a hammer or an inverted hammer, that's when I'll become active and I'll start initiating a trade. Right. So we're going to go over this in more detail in our upcoming sessions. For now, let's move on to our next topic, and that is why should we trade with Brine? Okay. So the very first thing is that, and the most important, I believe, is that it is trustless, right? You do not need to trust us with your token because we are a truly decentralized exchange, right? We believe that the custody of your tokens should be with you and nobody else, right? And especially we keep hearing about these centralized exchanges, who are robbing the users of millions of deposits, right? It's very important for us to use trustless and decentralized exchanges so that we can keep our tokens safely. The next best thing is that it is gasless. Okay, and let me tell you, this is such a big plus for all the high frequency traders and all the day traders because they end up making 10, 12, even 20 trades in a day. Okay, and if you keep giving gas fee of 1, 2, 3, 4, 5%, which is true for a lot of decentralized exchanges, they charge their users 2 to 3 to 5, even 10% gas fee when trading. It becomes a lot, right? And that is a very big plus with us that you don't have to pay any gas less, no matter if you're taking 100 trades a day or 200 trades a day or 5 trades a day. You don't pay any gas fee. Next thing is that we have a very huge order processing capacity, right? So your trades are never gonna get stuck up. You're always gonna have a very smooth trading experience with us, right? And the fourth thing is that we have an order book right beside the chart, as we can see here. Let me go on to the Brine platform to show this to you. Okay, I think my wallet is not connected right now, but I'll just show this to you on the presentation here. If you see, we have the chart here, and right on the left hand side, we have the order book. Okay, and the order book will help me analyze the liquidity at different prices. Okay, so the liquidity is basically the number of orders at the different prices. So I know that if I place a trade at that order, there is a seller sitting there who I can buy with. Okay, and my trade is not going to get stuck. So if I want to sell, I can easily sell because buyers are sitting there. If I want to buy, I can easily buy because buyers are sitting there. So I can do my liquidity analysis very easily using the order book that is placed right on the left of the chart. Right. And the last thing is referral rebates. So make sure that if you have any friends who are full-time traders or who trade a lot, make sure you send them your referral codes and you can make up to 50% of their trading fee. Right. And with this, we come to the end of our very first session. I know we have covered only the basics of trading in this session, but that was very important because a lot of us are beginners and we want to take everyone along with us in this trading journey of 10xing our trading game and becoming a truly profitable trader. So now make sure whatever you have learned here, we fortify this by applying it in the real market. Okay, so go on to your charts, find out the trend, whatever we spoke about today, finding out the trend, marking support and resistances, looking for doji candles, looking for Marabuzo and hammer and inverted hammer candles. Make sure you fortify the learning by applying it practically. And in the next session, we're going to come up with even more advanced topics, and it's going to be a very fruitful journey for all of you because I'm going to cover a lot of exclusive topics which have not been covered anywhere else. One of the best strategies which I like is the X-axis strategy, which basically talks about how we are always trading the Y-axis, right? If you see the chart, there is X, right? There is X vertically and there is Y horizontally. We are always focused on the price, but we are never looking at the X-axis, which is the time, right? We're always so focused on the price, we forget the time. But the time is just as important as the price. And that is what we're going to cover in the X-axis workshop that we'll have in the later sessions, and a lot of similar topics, similar advanced topics that we're going to talk about. So right now, that is it from our end, and see you soon. Stay tuned, and we'll be back with more interesting topics.
Thanks a lot, Aryan, for such a great session. We have a lot of questions for you. So, Mermaid is asking, how long does it take to become a seasoned trader? How much should I learn before getting into the market? Is what she's asking.
Sure. So, Mohammed, let me tell you, it all depends upon the number of hours you give in. If you give only 20 minutes a day, it's going to take you a year. But if you're focused and you give an hour or two every day, it can take as little as 2 months for you to become a seasoned trader and become profitable and get out in the market and trade.
Right. Thank you. We have one more question from 777 $HAI high. So he's asking about smart money.
Okay.
As trend is your friend. So do you know something about smart money? I'm not sure in which context being used.
Yeah, exactly.
Okay, let me ask you the next question. So he's asking you about your best PNL. So
Sure. So I'll share you one trade that I took on Verge. So this trade on Verge I took I think on 2nd of June. Somewhere around 2nd of June I took this trade. I bought somewhere around I think 0.0032 and I trailed it all the way up I think to around 6. So I made I made about 90 to 95% on that. But it was it was a coin that that is not available for derivatives, so I couldn't make as much. But yeah, that was a very good trade because I almost doubled my money, and the risk I took for that was only 20%. Right. So this is also very important that we always manage our risk, and we are always looking for bigger rewards and smaller risk. So this is one trade I took. In the coming sessions, we're also going to trade live on a Brine platform. So stay tuned if you want to see that too.
that's amazing, Aryan. If we have any more questions, then you can either unmute yourself and say thanks a lot. Okay, we'll be open for questions now, so you can post it in the chat, or you can unmute yourself, of course, and go ahead. So yeah. So what about risk management? Do you have any tips, Aryan? We have a question.
Yes. So as I spoke, it's very, very important for us to keep a stop loss, right? And this is the starting of risk management, right? The starting of risk management is preserving your capital. It's all about preserving your capital. And the way we preserve our capital is by keeping a stop loss. So never ever trade without a stop loss. Always keep a stop loss and make sure that when your stop loss comes, you exit the trade because it is okay to be wrong. I'll tell you, I know very, very good traders who are right only once or twice. If they trade 10 times, out of 10 times, they're only right twice. But they still make money. Why? Because their stop losses are very, very small and they're very strict with the stop loss. When the stop loss comes, they exit their trade. And whenever they hit a jackpot, they keep it running. Right? They trail their stop losses and they make very, very good money because they make sure that their risk management is in place. Right. So in trading, I'll tell you, it's not about how many times are you right. It's all about how less do you lose when you lose and how big do you win when you win.
Right. Absolutely. That makes a lot of sense. I'm sure like after this, our community will have much lesser losses, if not huge gains in the beginning. But yeah. Okay, we have a reply. So So yeah, he's mentioning that he has faced situations where his stop loss has been blown out. So
Okay.
what could be the reason for
Okay,
this?
by blowing out, do you mean that your stop loss was skipped?
Yes, I think
So
so.
a lot of times it happens that the stop loss gets skipped. So what we need to do in that situation is whenever we keep a stop loss, we need to enter two prices, right? The first price is the stop, and the second price is the limit. Okay. So suppose, okay, I'll give you a live example. Suppose I want to take a trade here. Okay, suppose I want to take a trade here and I want to short the market because I see that the trend is downwards. I want to short the market. So I will sell somewhere around here, okay, at 0.00618. I want to keep my stop loss at this 0.0072. So I'm going to keep the stop at 0.007 and I want to keep my stop loss limit at 0.007. So what it's basically doing is that it is giving the market some time to execute my stop. Because it might happen that the price directly jumps from here to here and my stop loss gets missed, right? And that is why I want to keep some buffer between my stop and my limit so that the market gets some time to execute my stop and my stop is not blown out. So, of course, we'll be risking a little more than our initial stop loss, but it won't happen so that my stop loss gets skipped. And this is very important to follow, especially in the crypto market, because we see that a lot of times some coins have freak trades wherein the prices jump a few points and a stop loss gets hit.
Right, absolutely. I hope that answers your question. If you have any more doubts, you can either unmute yourself or you could post it. So yeah, he's posted another question. What is most difficult in trading, and how to fight emotions and move according to your strategy? Yeah.
So I believe that the most important thing in trading is managing yourself. We spend so much time in learning all these different techniques and strategies of RSI, Bollinger Bands, moving average, Fibonacci, and I don't know what all. So many new things have come into this market. We spend so much time in learning all of this, but what we forget is trading is all about managing yourself. It's about self-discipline. So I believe the most important thing is managing your monkey mind and keeping it calm and making sure that you stay calm even when you enter a trade. Now, I was watching this interview of this another trader, a hedge fund trader, and he was telling me that I always become more foolish once I enter a trade. And that is because my mind will start playing tricks with me once I enter a trade. Okay, so once I enter a trade, it's gonna push me into self doubt. It's gonna push me into believing that probably I didn't take the right trade, and it's gonna make me enter early, or it's gonna make me hold the trade even after the stop loss is hit. So it's all about making the right decisions before the trade so that once you are in the trade, you don't have to make a lot of decisions. You just have to execute, like a machine. Once you have decided your stop loss, your target, your entry level, and everything, and you're trading, just execute them. And make sure that you are not, overriding your own system. So if you make a system for yourself that I'll take 1% stop loss or 2% stop loss, whatever you decide, make sure you stick to it.
Right, absolutely.
And the way you fight your emotion and you stick to the strategy is by practicing it. Okay. I cannot just sit here and make you a seasoned trader. I will teach you, I will give you all what you need to become a seasoned trader, but in the end, you will have to trade yourself to make sure that you are implementing whatever you're learning so that you fortify that learning and you actually learn how to implement it. Right. There are so many good books available, but we have very very few good traders who actually make money, and that's because we fail to implement, we fail to practice. So my suggestion to all of you will be whoever is starting to trade, start with a very small capital, very very small capital, whatever you can afford to lose. Okay, start with that capital, start trading, and over the time you will learn that you yourself will develop a discipline and you will start following your risks.
Right. That's really great advice, Aryan.
Yes.
All right. We have one more text.
Sure.
So he's mentioning that just when a lot of FUD immediately appears, fear and desire to sell everything, the same with greed, for example, as it was with XRP, I was able to take only 20% of the movement and then I got scared. So this is what he's mentioning.
Sure, very, very good question. I believe let's take the chart and talk about this. Okay, now just what we learned in our session today, if we just apply that, okay, suppose you initiated a trade somewhere here. Okay, after this, I see a Marabuzo candle, what we discussed in our session today. Now, once I see this candle, what I'm going to do is I'm going to trail my stop loss. So the key to riding a trend is trailing a stop loss, because that's the only way you are going to preserve the profit that you have made, and at the same time you can feel assured that, okay, if not a lot, I will still make some money out of this trade. Okay, so I enter the trade here, I see this Marabuzo, I'll move my stop loss from here to here. Okay, then again I'll keep riding the trend until the stop loss is hit. Again, when I enter, when I see this Marabuzo again, I'm gonna move my stop loss here. Then again, I see a Marabuzo, I'm going to trail my stop loss. So I will keep trailing my stop loss till I see big candles in my direction with small wicks. And once the stop loss is hit, which was hit somewhere here, so I see another Marabuzo here, I will, exit somewhere here. Or if you take this as a stop loss, I'll exit somewhere here. So, you capped on to 20%, but if you followed this strategy, you would have capped on at 47, 48%, right? It's a big jump if I trail the stop loss. And this is the mistake which all of us make, right, in our initial days. But what we want to focus on is we want to have one or two very, very big trades in which we make so much that all our previous losses are taken care of.
Right. Actually, that's pretty good advice. You shouldn't lose your hope just by, losing one time. If you do something the first time, obviously you will not succeed. But I think we should listen to Aryan's advice and, try our best and do not give in to our
Congrats,
emotional.
he actually made 20% on that XRP trade, so congrats on that.
Yeah, that's really huge. Usually, if you invest your money in a bank or something, you would not even get it in a whole year. So it's pretty huge. Yeah.
Exactly. Amazing.
If you have any more questions, you can just put it on the trading discussion channel that we have in this category, and we'll get back to you. Aryan will get back to you whenever he's available. And thank you so much. We'll be putting this live on YouTube, so you can go back and look at it, look at things where you think you could use a revision. So yeah, thank you so much, everyone. We'll be having another session the next week, because I feel we received a great response for this one. So we'll have it the same time on Saturday. If you have any feedback, you can post it on the trading discussions channel, and we'll try to improve our session for the next time, so we're more ready for giving you the best experience, the best learning experience. So yeah, thank you everyone, and thank you so much, Aryan, for your time. We all really appreciate it. Yeah.
Most welcome. Just to answer Johnny 888, of course, we are still improving. We are on our journey to make Brine the best platform to trade on, right? And that is what our team is working on day in and day in and night. And this session that we are having on trading is another, contribution to making Brine the best platform to trade on and helping you guys in your trading journey. So stay tuned, Johnny AAA, and thank you so much for the feedback. And we are sure that going ahead, you will be happy with what we deliver to you. Thank you so much.
Thank you so much. Have a great day.